Good morning. Welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to be going through our live rates and then we're going to be talking about DSCR loans. Give us just a moment here to go live on all the different platforms and we'll get started here in a minute. We got the chat up on the screen there. Feel free to drop a comment there in the chat. You can also drop any questions you have in the chat as we go through here. Our deep dive topic for today, which is our favorite loan type, DSCR loans. So it looks like we're live on all the different platforms. We'll go ahead and get it started. What we'll do is we'll take the chat off the screen for now, but go ahead and keep dropping comments in there. Drop any questions you have in the chat, and we will go ahead and get to them after the presentation. Let's go ahead and get it started. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president of Hershey and our sales manager, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every weekday at 11 a.m. Eastern on this show is go through our actual live mortgage rates. And then we do a deep dive into a different loan type. And today's loan type is our favorite here at the Mortgage Calculator, which is DSCR loans. So Jose will talk about what a DSCR loan is and go into some examples of some cool different kinds that we have. But before we do that, we'll do what we do every morning, which is pull up the live rates. So Nick, if you're ready, let's go ahead and pull up the rates today for some different programs and see what they are looking
like. All right. So definitely some positive momentum here. It looks like we will check out all the different programs and set up a basic scenario to compare the APR. If you'd like a full breakdown, an itemized loan estimate of all the fees that go into the APR, please get with our team members. We have over 300 loan officers to help you out. For our demo, as we do every day, we'll set up a basic scenario. We'll set up a single family home, 500,000 purchase, 400,000 loan amount, that corresponds to 80% loan to value, 20% down payment. And we'll set a 760 estimated credit score and an estimated 40% debt to income ratio. So with all those settings, let's check out the rates for today, Monday, July 22nd. And typically the first option that most borrowers think of when they're thinking of a mortgage is a conventional primary mortgage. So 30-year fixed conventional primary coming in today at 6.49, final APR 6.790, just a touch lower than it was last week. Hopefully we see it continue to go down. Now, if for any reason our customer doesn't qualify for a conventional program, the next option we want to present is an FHA option. FHA allows more leniency on credit issues, as well as a much higher debt to income ratio. However, FHA requires upfront and yearly mortgage insurance. So with all of that included, the rates come in at 5.5 and the final APR with all the fees, 6.477. So notice if our customer qualifies for both, they could choose FHA if they're willing to do the monthly mortgage insurance. And if our customer needs to use FHA for that leniency, definitely a good option. It is very comparable. And moving on to our VA. VA is only for eligible active service members and veterans. If you are eligible, these programs are great. Rates as low as 5.75 today. And final APR, including any funding fees, 6.067. So notice if our borrower qualifies for a VA, definitely a better option than an FHA and conventional when you compare the APR. And moving down to our, let me switch the screen here. Let me see better. Moving down to our USDA option. So USDA is only for properties in USDA eligible areas, the rural areas of the country. If our borrower and property is eligible, this is a good option. So USDA comes in today at 5.75, final APR at 6.488 with all the fees included. So our customer will probably be comparing this to FHA, which is actually almost identical today. And it's quite a bit better than conventional. So typically USDA is going to be a little bit better in those areas. So a great program to consider if you're looking in those areas. Now, those standard programs, any other bank or lender can offer, but if our customer doesn't qualify, many other banks or lenders have to cancel that customer. And we love to present our 5,000 additional programs here, starting with our non-QM alt doc option for a primary home. So if our customer doesn't qualify for any of the standard options like a conventional, needs to use alternative docs, we can do that here. For a primary home, rates as low as 6.875, final APR 7.196. This is probably a bank statement or similar. We have 1099, P&L, asset related, all kinds of options. but notice it's very comparable to conventional here, within a half a point of conventional, to use alternative docs. So a great solution for our borrowers that need it. And our non-QM options for investment properties, there are a ton. First up here, 30-year fixed non-QM alt doc. So again, bank statement or similar. Comes in today at 7.25 rate. Final APR 7.568 with all the fees included. And we'll compare that to our other investment options. We do not have any government options. They are not eligible for investments. So no FHA, VA, or USDA, but we do have our conventional options coming in today at 7.125 rate. Final APR 7.482. So notice it's a touch cheaper than our alt doc option today, which is good. But we always recommend our customers to check out our DSCR, our favorite option, and Jose will go into some very detailed examples today. Our general examples here, the most standard option, DSCR stands for debt service coverage ratio. No income or employment is used. We simply use the estimated rents from the appraisal to determine a DSCR ratio. If the estimated rents can cover the expenses, aka the property cash flows, that's a ratio of 1 or higher, which is preferred. We set the ratio here on the demo to 1.5 so we can see all the programs. And the first up here is our 3 repayment penalty option, which is standard. Rates come in today, 6.75, final APR 7.067, which blows conventional out of the water, as well as the alt doc option there. And our 30-year fixed DSCR with a 5-year prepay gets even better, 6.375 rate, final APR 6.707. And the final option we do on our demo every morning, but Jose will get into more options here, is our no prepayment penalty option. Some states do not allow a prepayment penalty, and some investors don't want one. Rates today for that option comes in at 7.25, final APR 7.608. So it's a touch higher than conventional when you compare them, but most of our investors will still choose a DSCR even if the rate is substantially higher. And our final 2 demos here, we have our 30-year fixed non-QM options for second mortgages, fixed rate second mortgages. So a lot of our customers have a great low rate first mortgage, but still need to get cash out. Instead of refinancing the first mortgage, you can get a fixed rate second mortgage instead of a HELOC with better rates and terms. So 30-year fixed second mortgage for a primary, get cash out for rates as low as 8.125. Final APR comes in at 8.305. And these are non-QM, so you can use bank statements and similar as well. So great options. And the same program we can use for our investors. Investment properties, you can get cash out. HELOCs are very rare for investment properties anyway. So this is a great option for our investors. Rates as low as 9.875, final APR 10.124 to get cash out of an investment property and keep that first mortgage in place. Now let me switch these screens up again here. And we'll get into Jose's topic for today. So DSCR loans, there's literally thousands of options once we go into DSCR. Every option varies slightly. So Jose will talk about some general categories here that we can't do on our live demo for us to do the different twists and tricks we have. But there are literally thousands of variations here. So Jose, let's check out, I guess, the most popular variations that you're probably going to go through today.
Absolutely. Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. Now, to go over what do we mean by DSCR? DSCR means debt service coverage ratio. So that is, you divide the gross monthly rent divided by the housing expense, and you should be in a preferred scenario at least 1.0 or above. You do get pricing bumps for 1.25 or above or 1.5 or above. And conversely, we have less than 1.0, specifically 0.75 to 0.99 DSCR and less than 0.75 DSCR. Now we do have up to a 75% loan to value, even on our less than 0.75 DSCR on a purchase. So best case scenario on any DSCR is only 15% down. And I guess you would call the worst case scenario, which is actually a pretty great scenario when you are under 0.75, is maximum 75% LTV. So not really much of a difference from the highest LTV option to the lowest LTV option. So let's go ahead and share the options today, because I have some nice twists to the DSCR options there as we go through the obvious and less obvious ones. So our first one is our 15% down option, 85% LTV, which is a maximum for a 1-unit property. So we've seen this option go down in rate and cost quite a bit lately. So here we are at 7.875 as our lowest cost option at a cost of 1.375 points. And you can buy that down to 6.999% at a cost of 3.225 points. And this is for a 15% down option for a 1-unit property. Now we have the same option for up to a 4-unit property. That was previously not possible, but we do have that avenue now, and pretty good rates there. 8.125 is costing 2.1 points, and you can buy that down to 7.75% at a cost of 3.225 points for our 4-unit DSCR purchase with only 15% down. That's a great one. And now our standard DSCR purchase for a 1 to 4 unit property with 20% down, and 7.125 is actually offering a little bit of a lender credit there, 0.025, and you can buy that down to 6.125. Those are amazing rates, and they keep dropping. Now, same option actually allows us to use short-term rental options to qualify the same DSCR purchase, as long as our DSCR is at least 1.5. We get the same rate option, 7.125 with a little bit of a lender credit, buying that down to 6.125%. No LTV adjustment for this purchase option. Again, the only quote-unquote catch here to be able to use this option, specifically the AirDNA option, is if your DSCR is at least 1.5. You do get the 20% LTV. Now, going into our low ratio DSCR option, this is for the 0.75 to 0.99 option, 25% down for this loan option for 1 to 4 unit properties. And here's 7.875 is at par, and you can buy that down to 6.49% for our low ratio 0.75 to 0.99 DSCR purchase for a 1 to 4 unit property. And our less than 0.75 DSCR purchase option, we call this our no ratio, right? The property technically is not cash flowing, or at least cash flowing below a 0.75 for a 1 to 4 unit property. Great news is we can still fund this loan. 8.624 is our lowest cost option at par, and you can buy that down all the way to 7.249 at a cost of 3.225 with only 25% down payment for your less than 0.75 DSCR purchase. And we actually do have a DSCR cash out refinance option at 80% LTV or above. 80% LTV, sorry. It is for 720 credit score or above is what I meant to say on that. So 80% LTV cash out refi, 720 or above credit score. We're looking at 8.375 at a cost of 1 point for that DSCR 80% cash out option. And our more standard 75% LTV cash out option, you do see rates obviously get substantially better when we are at the more standard 75% LTV for a DSCR cash out with at least a 1.0. Here we're looking at 7.125 with a lender credit of 0.025. The rate here that costs approximately 1 is 6.75. So you can see the difference from 80% to 75% is a little bit over 1% in the rate. Because here we can go all the way down to 6.125 at a cost of 3.225. So, and that is some amazing DSCR cash out action there. So now some additional twists to our guidelines here. DSCR cash out refi, 75% LTV using 12 months short-term rental revenue reports. Again, great options here. 7.125 with a lender credit of 0.025. And you can buy that down all the way to 6.125 at a cost of 3.225 points. And this is using 12 months short-term rental revenue reports, 75% LTV. Now, here's an interesting one. This is a DSCR cash out refi at 75% LTV using AirDNA for properties recently put into service. That's the catch here. Properties recently put into service as a short-term rental. You would have to document that, but look at the rates. And this is using AirDNA on a cash out refi, best of both worlds. 7.499 is at par, and you can buy that down to 6.999 at a cost of 1.6 points for our DSCR cash out, 75% LTV using AirDNA. And now for our low ratio option with a DSCR of 0.75 to 0.99, cash out refi, 1 to 4 units, 70% LTV. So we only have a 5% drop on LTV, and you're looking at 7.99 is our lowest cost option at par. And you can buy that down all the way to 6.625% at a cost of 3.35 points. And now our no ratio DSCR cash out for DSCRs less than 0.75. And again, great news, 70% LTV, max LTV on that option. Great rates here, 9% at par. And you can buy that down to 7.875 at a cost of 3.475 points for our DSCR no ratio, less than 0.75 cash out refi, 70% LTV. And our last option here, last but not least, for our low or lower credit score borrower, this is our lowest credit score on which we can still originate on something other than hard money. This is 575 minimum credit score, 65% LTV cash out on a DSCR loan, and you're looking at 11.125, costing you 1 point to get 65% LTV on a DSCR refi. And it's also, by the way, 65% LTV on the purchase for that same 575 credit score. So please do look to the mortgage calculator for all of your DSCR loan options, both purchase and refinances.
All right. I don't see any questions here in the chat, but again, amazing programs. Definitely our favorite program here at the Mortgage Calculator. Still no questions coming in. We'll go ahead and wrap it up. Remember that we do this every weekday at 11 a.m. Eastern, where we go through our live rates and then do a deep dive into a different loan type. So we will see you all tomorrow at 11 a.m. Eastern for the next episode of